Good morning, good afternoon, and good evening, wherever you may be, and welcome to this webinar by Fintelekt and Asian Bankers Association. My name is Shirish Pathak. I work at Fintelekt, and it is my pleasure to be your host again today for this webinar. Today, we have over 500 participants registered, representing 33 countries. I hope most of you were able to watch this quick 2-minute Fintelekt Academy video that we played just now, and I would urge you to visit the online platform and take a look at the huge number of AML CFT resource videos there. My sincere thanks to our dear friends at the Asian Bankers Association, Ernest, Amador, and Mick, for their ongoing efforts in organizing educational sessions like this one for the benefit of the Asian compliance community. So as you all know, the title of today's webinar is the cultural landscape of AML compliance. And we will address the cultural landscape of compliance and how cultivating that culture can serve to improve a team's mindset, skills, appropriately manage risk, and at the same time increase business opportunities. So some of the key issues that will be covered by our expert panel of speakers today include what is a culture of compliance and why is it so important, recognizing the difference in cultural environments in the financial sector as opposed to corporates. What are the characteristics of a healthy compliance culture? How can we encourage innovation and technology to serve compliance needs? How do we bring about cultural change in a way that innovative thinking becomes the norm? And what are the benefits to various stakeholders by virtue of an enhanced culture of compliance? So we have three speakers today, all representing the Mizen Group from the United States. Patrick Kelly, who's the co-founder and CEO. Paul McCarthy, co-founder and the Chief Technology Officer. And Dr. Katy Dineen, Senior Associate. Welcome, Patrick, Paul, and Katy, and thank you so much for joining us live despite the time difference. I'm sure we've wrecked your sleep pattern for the next couple of days at least. As usual,
Thank you, Shirish. And thank you to Fintelekt for inviting us, and also the Asian Bankers Association for the opportunity to speak with you this morning. Yes, it is early in the US, but we'll get some sleep later on this morning.
Absolutely.
Thank you. So next slide, Paul, there. This morning, our objective today is to try and educate you on the understanding of culture and its relevance to the AML compliance. We're breaking down the issues, and we will provide some nuggets of information that you can take away. Today, as we discuss this topic, we do so across the following areas: background, who we are, what's happening in the industry, problems and our view of AML, the regulatory expectations, which are key, not only in the US, but also right across the world. Then we'll go into what is culture, business cultures, and what we term cultures within cultures. We're not necessarily talking about national cultures here. We're talking about cultures in the business sense. The importance of the compliance culture, both to the US regulators and global regulatory expectations, how to measure it, and our approach to measuring it, which we have developed over a number of years. Next slide, Paul, please. About the Mizen Group. First, a little bit about us. We were formed back in 2013, and our view is compliance culture is not only a necessity, but essential for organizations to perform compliance optimally. It's a nebulous topic, and most organizations struggle with understanding, managing, and improving it. However, the key to addressing these issues for any organization is by making the cultural commitment we will today attempt to try and unlock for you. Since 2014, our core focus of our journey has been to understand, define, measure, and improve culture in financial institutions. We initially got interested in culture as part of our consultancy work, where we were asked about culture on a global scale for an international bank that had over 120 different locations, where regulators were very interested in the different business units that they had and how the culture impacted the work that they actually did. But there was no clear direction in terms of what was meant for our clients. We view our mission to assist our clients to reduce the risks and costs of regulatory compliance, and to achieve that in a number of ways. Number one, examine with our tools how they can benchmark their compliance culture and processes. Number two, this drives efficiencies by identifying underlying weaknesses as opposed to reacting to symptoms. We advocate for the use of technology to improve efficiencies, the culmination of which results in the reduction of risk of financial penalties and reputational damages for regulatory violations for our clients. Next slide, please. And this, I will hand you over to my colleague, Paul McCarthy, who will take you through the next slide on current trends.
Hello, everyone. So first, before we get into the kind of the core topic, I wanted to use a slide here to kind of maybe shape some of the problems that you're all experiencing right now and what's going on in the industry as we see it. In terms of continued investment in technology, we're seeing a lot of investment with fintechs in particular remain very strong, even throughout last year with 2020 against the headwinds of the pandemic. We know from our own research and what we're seeing across the industry that financial institutions and fintech partnerships becomes a critical element to be able for organizations to be able to drive their transformation strategy. And I think that's all been kind of performed against the backdrop, you know, with the COVID and the implications of everyone introducing contactless mechanisms and ways of interacting with their customers has really just been accelerated. And I suppose we're also seeing kind of an appetite amongst consumers for new and alternative products. And ultimately, what does that mean for all of us? So the implications of all that, you know, we're seeing obviously in that ecosystem, the combination of both fintechs and financial institutions produces a lot of different interesting scenarios. So you have cultural misalignments where we see fintechs are often, you know, let's say startup technology, innovative mindset. FIs in particular are conservative cultures that reward consistency and careful compliance risk management. The new launch of products, you know, you're seeing new emerging risks being introduced. So from a compliance perspective, again, we have to be aware of the challenges that presents. And we're also seeing, you know, again, the challenge where very tight third-party risk management, vendor risk management procedures have to be applied. Again, which does impact and mitigate some of the opportunity that may present itself with unique and small or even innovative fintechs. And then bring it down to the kind of operational and competency challenges that occur where banks challenge, specifically the small and mid-tier banks, may not have the tools and may not have the understanding to appropriately engage with fintechs. So, you know, these are some of the challenges that exist. So, you know, what does that all mean? And again, our view and our opinion is that, you know, regulatory awareness and concerns will continue to rise. I mean, again, our interactions with regulators, now that you see this ecosystem where banks working with fintechs working with banks, there's a sensitivity around it of what risk is that introducing to the overarching system. You know, you saw that with the Wirecard example last year. You also see that FIs recognize that they need to innovate while balancing these risks that are being presented by these new products that are being introduced. So, you know, focusing on strategic initiatives to adapt to the changing needs, aligning those initiatives with a focus on good customer outcomes. And all of this is being done against the backdrop of the overall impact of the pandemic, you know, where you have staff operating remotely, oversights getting weaker, and lack of attention to culture only increases compliance vulnerabilities. So, you know, our view again is that a healthy compliance culture really produces a benefit to you as an organization to reduce the risk and improve those business outcomes. So with that, I'm going to hand you over to my colleague, Katy Dineen.
Thanks, Paul. So that was a great overview of how important culture is. But looking globally, how important is culture to regulators all over the world? Well, the first thing to say is that we could have filled 10 quotes different regulators about how important culture is. And the truth is that regulators are focusing more and more and more on culture. And that raises the question, why? So why is culture becoming so important to the regulator? Our best answer to this question is that while regulators all over the world understand the importance of correct policy and procedure when it comes to compliance, they note that this is not enough really to avoid poor regulatory outcomes. You can have the best policies, procedures, and the best people doing compliance in the world, and yet you can have poor regulatory outcomes. So really, what bridges that gap, the gap between proper procedure and poor regulatory outcomes? And when regulators talk about this gap, they usually talk about culture. Now, I'm not going to read out all of these quotes. This PowerPoint will be available to you afterwards, but I will draw your attention to James Shipton's quote on the left-hand side of the slide. And Shipton says that there is widespread failure and professionalism across the finance sector. The industry has a long way to go to rebuild its reputation to engender trust again. And it's that word trust that is very important to us when it comes to culture. And as we proceed through the slides, we're going to be talking a little bit about trust and a lot about trustworthiness, trustworthy cultures. So if you move on to the next slide there, please. So we've talked about the regulator and culture, but what about the regulator and innovation? Is the regulator keeping up with innovation? And the simple answer there is probably not. And this is an answer that the regulators themselves all over the world will say that it is a difficult thing to keep up with the pace of innovation at the moment. Now, given that the answer is probably not, there's a number of ways you can understand complexity involved in that. So if you look at the left-hand side of this slide, you'll see a quote from Brian Knight at George Mason University. And he notes that actually regulation is not keeping up with the pace of innovation. And that is actually a problem for regulators, he thinks. So he will say that the laws as they stand now are not fit for purpose for innovative fintechs, and that impedes innovation. It's stopping innovation. On the other side of that coin, you have the regulator saying, actually, it is difficult to keep up with the pace of regulation, of innovation. But the people that are at threat here are consumers. So it is possible that the laws don't cover consumers and they can suffer harm from use of products that are unregulated. So if I was to draw one thing from this slide, it is the fact that the regulator notes that there needs to be more flexibility. And both parties note, both innovators and regulators note that this is a very difficult thing to do. Our answer to this difficulty might be to look at culture. So if we go on to the next slide, please. If one of the answers to this question is culture, so if there isn't a law in place that will protect consumers given the pace of innovation, what can culture do to help here? Well, the first thing to do is to understand what culture is. And let's approach this obliquely. Let's not define culture right now, but let's look at what culture is across industries, even across nations, really. How do we understand culture colloquially? So when you ask anyone what is culture, when it refers to a group of people, they often say things like social glue. And the culture is what is unique to that group of people. In fact, if you ask employees at organizations what their understanding of culture is, 9 times out of 10, they will say something like, culture is the way we do things here. What we can gain from this colloquial understanding of culture is uniqueness, is difference. There is no one way to do culture. There is a multiple number of ways to do culture. And the regulator understands that there's no one size fits all when it comes to culture. There are numerous ways in which culture can have good regulatory outcomes. So if there's no one size fits all, what is the regulator looking for? Well, that's a difficult question. And when you ask the regulator that question, they tend to talk in analogies and almost metaphorically. They tend to say things like, we know it when we see it. In particular, we'll know toxic cultures when we see them. So if we move on to the next slide, please. So once again, taking this broad view of culture before we get into the specifics of culture within financial institutions. One thing that people often note, and it's something I noted in the last slide, is the sort of difference involved in culture. The fact that there is no one size fits all. And this is very clear when it comes to different countries and different regions when it comes to culture. So for example, you have China there, right? And the idea is that to do business, there are ties of family and community and trust involved. And from my own national background, the Anglo-Irish background, so I'm coming to you from Ireland, one of the things that a lot of Irish people say, even outside the business context, is my word is my bond. And that comes actually from a maritime, a sailing culture. And what it means is that the contracts involved in business are one thing, but without the trust that is central to promises, those contracts are meaningless. So although there is this difference when it comes to culture, there are shared characteristics when it comes to healthy culture. And one of the characteristics that we really look for in culture is trust and trustworthiness. What is it about culture that supports trustworthy behavior from employees? And we're going to talk a little bit more specifically now on that issue. So if we move on to the next slide, please. So trust, culture, and financial institutions. We've talked about these very broad understandings of culture, and now it's time to get specific. We're not looking at national culture. We're not looking at these broad ideas of culture. We're not even actually looking at organizational culture. We are specifically looking for a culture within financial institutions. So what are we looking for? Well, in research, when we define culture, we talk about the sorts of beliefs and values latent within an organization that support employees' decision-making and behavior. Now, when we apply that to financial institutions, we'll see that there's three very important aspects of culture present within and throughout financial institutions, and that is conduct culture, risk culture, and compliance culture. We're going to be talking to you today a lot about compliance culture, so let me focus on that. So when it comes to compliance culture, we're talking about the beliefs and values latent within the organization that support a certain type of behavior from employees. And that behavior is either the circumvention of laws and regulations or the keeping to laws and regulations. And what we're looking for here when we're looking for culture is we're looking for what supports trustworthy behavior and decision-making when it comes to laws and regulations. So if we move on to the next slide, please. So we've talked about culture now very broadly, and we've talked about the specifics of what we're looking for when we're looking for compliance culture. Now it's time to talk broadly again about the kinds of characteristics that are present in healthy compliance culture. Well, very broadly put, we're looking for honesty, reliability, competence, inclusion, integrity, and whether the program is value-led. So just to probe into that a little bit more about what we're looking for, we're looking at whether employees believe and perceive that the program, their compliance program within which they operate, is led by values rather than led by a procedure of ticking the box. Is the compliance culture something which supports the spirit as well as the letter of the law? So if we go on to the next slide, please. Now, we've talked a lot about culture, But why is culture important? What is it about culture which helps financial institutions, in particular, given what we have talked about in terms of innovation and pace of innovation, what is it about culture which helps financial institutions and fintechs partner positively? Well, financial institutions need to monitor their own culture, right? We've talked about how important culture is to the regulator. If financial institutions can get between their culture and poor regulatory outcomes, they're one step ahead of the sorts of outcomes which cost them money and cost them reputation. If they get to know their own culture, they can know if there is a risk involved in that culture. Not only can they know their own culture, but they can know the culture of their strategic partners. It is one thing to look at policy and procedure and communications documents. These will tell you one thing about the people you are thinking about partnering with. But if you know what the employees think, how they perceive the culture, and how supportive those employees are to do the right thing, you know an awful lot more than you can gain from these sorts of documents. And if you know your own culture, and you know the culture of your potential strategic partners, you will know whether there is alignment in those two cultures. From the point of view of fintechs need to demonstrate that not only do they have the policies and procedures, but these are embedded within their organization. These are understood by their employees, and their employees are supported not to just tick the box of compliance, but to do the right thing at the right time for the right reason. And both financial institutions and fintechs need to demonstrate that they know their culture, that they're on top of their culture, that they can improve on certain aspects of their culture if they need to. And they need to be able to see where are their peers in terms of culture. Can they share excellent competencies, or can they learn from their peers in these terms? So if we move on to the next slide, please. So I think we've covered the landscape now, and I think we've covered maybe why it's important. But how can you know your culture? So I'm going to talk to you now about how Mizen and our cultural diagnostics can help people and organizations know their culture. How do our diagnostics work? You might have guessed at this stage that our diagnostics are employee perception based. That means that we're taking a pulse of what employees think about their culture, how they perceive their culture. These diagnostics are confidential and anonymous, and they take approximately 15 minutes. So these surveys take quite a short time for employees to complete. We don't just take these employee perceptions. We also collect demographic information, and we can collect information about the organization if the organization is comfortable doing this. We put this information together with very advanced quantitative analytic tools. And those tools are used to gain the insight from this information. And this insight is provided to our clients in a scorecard. And this scorecard is easy to understand, clear, and insightful. So if we move on to the next slide, please. Now, getting into the real nitty-gritty of our diagnostics. These are employee-based perceptions and based surveys, and it asks employees their perceptions on a number of items. These items, or the questions within our survey, are grouped in accordance with specific program dimensions. These program dimensions are the dimensions through which employees experience their culture. I'm not going to list these out for you. As I've said, this PowerPoint deck is going to be available to you. But perhaps if I draw your attention to program orientation. So some of the items within this survey will be under the group scoping of program orientation. And that means that employees will be asked about how they see their compliance program being orientated. Is it orientated towards a tick the box mentality, or is it orientated towards supporting their autonomy, supporting the idea that they are responsible for clients within the organization? We also collect information on what we call program outputs. These are the outputs that you would expect to find in a healthy compliance culture. And as I said previously, we collect demographics from employees. We can also collect organizations' metrics if the organization is comfortable for us to do this. And that means we can collect information on HR retention rates, whistleblowers, etc. And we put this together to create this scorecard for our clients and to gain the insight from this data. It's worth saying that we have some excellent behavioral economists working on the statistical methods underlying this. And when you have your scorecard, you will also have recommendations on how to improve if you think it's necessary. If we go on to the next slide, please. And with that, I'm going to hand you on to Paul, who's going to give you a practical outlook on how this works.
Thank you, Katie. So as Katie mentioned there briefly, so what we have developed here is an instrument to be able to help you measure in a quantitative way what your culture looks like. And the process then takes the information that we collect through survey perceptions and the other quantitative metrics, and we essentially produce 3 distinct outputs that produce our scorecard. And what the scorecard looks like, and this what you're seeing here on the slide here, is the first output which we provide is a descriptive result. And one of the things here we're looking for is the consistency between the dimensions and the outputs. If they're scoring high, are they performing consistently? Because again, one would expect, and again, based on our experience, well-performing organizations, not only should their dimensions or characteristics of their program be performing, but equally that should be equate to good outputs. So again, that raises the first indicator of whether things performing consistently or not. So that then produces one piece of information. The second piece of information, which is critical, and let me orientate you here a second, is, well, what does that information actually mean? And I noticed there was a question came through there from someone about, everyone talks about culture. Is it driven from the top? Is it driven from the bottom of the organization? What are the actual influencers within the organization? And again, our research and understanding is that across organizations, you can actually have different cultures, but those cultures can actually perform appropriately and actually produce good outcomes. So the question becomes, well, do you understand the culture? And then do you understand what influences the culture within your organization to achieve the best outcomes? And what we try to do through our analytical process is we understand the relative influence that these characteristics or dimensions have on the outputs. So this heat map here is indicative of an example where communications had a statistically significant influence on 4 of the 5 outputs. So that gives you a very strong indication that because communications is like a leadership driven dimension, that's where the most influence will have. So in terms of not only achieving a good result, in terms of the ongoing sustainability of your compliance program, that's where you're actually going to get the most optimum input in terms of your result. What it's also saying here is things like training, while they're all relevant and important, what they're saying is that they're actually performing adequately and optimally. And that what we would suggest is that you shouldn't continue to either change or tweak or enhance the investment in that area, but continue to perform as is. So this is really giving you that signature. And as I was referring to earlier, what we've seen is that this can actually be different across organizations. It could even be different across business units within organizations. But the critical factor is, does it produce the adequate output in terms of a positive result? But also now it informs you with the information that's necessary so that you can manage it and appropriately understand and dictate it on a go-forward basis. So I described the two outputs so far. The third output then is we actually give you an aggregate scorecard. So what this represents is essentially now what we're trying to produce is what is the likelihood of your employees giving you a poor cultural outcome. So what we then produce is, again, based on the descriptive results, based on the marginal effects analysis, is what we're producing here is a distribution curve. It's like a risk distribution curve of your percentage of employees that are likely to give you a good or poor cultural outcome or cultural response. And what you would hope to, what you would see in a high-performing organization is the vast proportion of your employees would be in the higher percentile. So this is indicative of a well-performing organization. And what this allows you to do now is because you have removed yourself, because this is a behavioral driven assessment, and you remove yourself from the kind of process view and from, let's say, the operational or regulatory view, this now forms the basis where you can actually now actually do a peer review. So you now have the ability to do internal benchmarking. So for example, you could do this across different business lines, across different geographical areas, across different, even with third-party providers, fintechs that you're partnering with, of how you actually, what is the alignment? And going back to what Katie said earlier, this is an area that's been a key area of our research where, you know, we find all the time that banks in particular and organizations and FIs have a very difficult time sharing competencies across business units because they fundamentally do different things. Well, this actually allows you the ability to kind of lift the conversation above that process and regulatory nuance so that you can actually share those competencies. And the real ability then, so what does this information actually mean? So what does a kind of a favorable outcome versus a questionable outcome look like? So here's an example of where on the top you will see that this is a favorable compliance outcome where you have, as mentioned earlier, the vast majority of your employees are in the higher percentile. The questionable outcome is down the bottom where you can see that there's an even distribution. It's consistent. So what this tells you is that there's a uniform signature happening across the organization. But again, because the vast component of the distribution is in the middle, it tells you that there's something that's questionable there that should be probed on further. And because you have the ability to kind of slice and dice on this by like the demographics within the organization, you could isolate this to perhaps a business line or a unit. But again, this is indicative of a uniform issue. And a second example here is where you can see that the curve is shifting more and more to the left. And what this is actually telling you, there's more of a problematic issue within, and again, it's uniform in nature. So there's a more of a negative influence here that's happening, or prevalent negative influence that's happening here within the organization that needed to be isolated. And what that lends itself to is then, what are some of the other scenarios, right? So you have things like that could happen, or a major concern would be like, what would be a rogue or problematic scenario? And this distribution here is indicative of what that might be occur, where it would be isolated to a particular business unit, business line, to help you, and you could slice and dice by the demographics to isolate that and see where it is. So what we're providing you here is the tool that can measure the performance of the organization to understand how aware, how committed, and how understanding that your employees within the organization have of the compliance or obligations of the organization. And we try to do that in a summarized fashion. So with that, I'll hand it back over to Patrick to summarize what we just talked about today.
Thank you, Paul, and thank you, Katie. So I hope the group got an idea of the type of thing we're talking about in compliance culture and the culture of compliance. We are based in the US, but we're a global organization. If you do have any questions or would like to discuss any of the topics, you see our email there, and also our website, which is provided for you here. I'll hand it back to Shirish. Shirish, I think, has been collecting questions for us, and we'll be more than happy to answer any of the questions that come through. Shirish.
Thanks, Patrick, and thanks, Paul and Katie, for that presentation. Great, thanks, Katie, for that. Thanks also, Patrick and Paul, for joining us today at this webinar. I know we went over time, but there were a lot of questions, and if we do get any more, we will send them over to you to have them answered separately.
Thank you, Shirish, and thank you to the Asian Bankers Association for having us on. It's been a pleasure, and we look forward to talking to you again. But thank you all for participating.
Thanks, Patrick. So participants, thank you so much for joining us today. I hope the session has been useful to you. Do get in touch with Paul, Patrick, or Katie at the email ID that they had displayed on the presentation if you need more information. Of course, to view more sessions and videos like this, visit fintelekt.academy, make a free registration and keep learning. Again, my sincere thanks to Asian Bankers Association for partnering with Fintelekt for this webinar. And we look forward to the next one in the first week of June. Have a great day. Bye.
Take care.